Well, hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita. And of course, it's a Friday morning. Solid cues coming out of global markets, given the fact that Wall Street has rallied for a fourth consecutive day on the back of a cool-off in inflation. Of course, over the next 30 minutes, we'll be talking about the cues for trade, all the stocks in focus this morning, including Wipro and Bandhan Bank. And of course, you'll also be getting all your stock-related queries answered by our expert on the show. So if you have any queries, send them in to us on our YouTube feed and we will have them addressed. But before we do all that, let's take a look at the top headlines at this hour. Wall Street rallies for the fourth straight day as producer price index hints at further cool-off in inflation. All the three indices are on track for a winning week. Asian markets, meanwhile, rise on a positive handover from Wall Street. The GIFT Nifty 2 is indicating a higher start for the Indian market. But remember, crude prices have hit a three-month high with Brent trading at $81 per barrel. Wipro's constant currency revenue declines nearly 3% in a weak first quarter, in line with the Network 18 poll. The company guides for tepid revenue growth in Q2 as well and warns of more contraction going ahead. Other stocks in focus include Bandhan Bank as it reports its first quarter earnings today. We'll also be putting the spotlight on stocks like AngelOne and RVNL. Senco Gold makes its D-Street debut today. The 405 crore rupee IPO had garnered strong response from institutional investors. Analysts expect shares to list at 35 to 40% premium over its issue price. PM Modi reaches France as the guest of honor for its National Day parade. In fact, announces that the two countries reached an agreement to introduce UPI in France. The Defence Acquisition Council has also cleared the purchase of 26 Rafale jets and 3 submarines for the Navy. The deal will be officially announced during the Prime Minister's visit. Well, let's now bring on board our first guest for today. We are joined by Chakri, Lokapriya, who's the MD and CEO at TCG AMC Advisory Services. Good morning, Chakri. Good to have you on the show. Well, look at the kind of rally that we have seen in the markets. But, would you say that the markets have topped out because we're not being able to sustain 19,500 levels on the index? But given the fact that the global cues are supportive, of course, there is evidence that US inflation may be cooling off and the Fed may just about look at one more rate hike instead of the 2 that was being penciled in. Everything working for Indian markets, except for maybe the crude prices, which have once again edged higher. What's your own view going forward? Do you think we can look at higher highs? Given the fact that one big impediment that the US Fed hiking more than once is out of the way.
Good morning, Nandita. Thanks for having me. Yes, you absolutely got it right in terms of the whole problem has been when does the US Fed start pivoting away from raising interest rates? Now, yesterday's inflation print in the US kind of indicated that inflation is cooling off. Now, if that stops the US from raising interest rates, then it pretty much allows the RBI to not just pause, but in the coming months start cutting rates. And with the slightly lower commodity prices, even though oil prices are around $80, I think the Indian economy is on the mend. Earnings growth have been low for the last 3 years. So despite the market rise, I think as earnings recover, as we go into the second half of the year, I think the market continues to rally. Yes, there might be about or two a small profit taking, but I would buy into those.
Right, buy on dips. That's the view coming in from Chakri. But Chakri, what about IT earnings? Most of the companies have reported, barring Infosys. TCS was muted as was being expected, but HCL Tech and Wipro weren't all that great. In fact, weaker than expected. But would you look at any kind of dip as a buying opportunity in IT stocks? But yesterday we saw a very strong rally coming in some of the IT companies. What would you attribute this rally to, given the fact that we are expecting 2 more quarters of weakness for some of these IT giants?
Going into the earnings quarter, everybody, the market expected weak earnings from the IT pack, and they delivered kind of inline numbers, slightly weaker than expectations. But more importantly, what was evident is that basically the weakness is due to the slight uncertainty in the US on the US trajectory of interest rates. Higher interest rates hold back tech spending, and therefore it also reduces the discounting of capital. It kind of lowers the valuation. And so that was what was holding it back. But now, which means that is a temporary thing because the long term still looks good. So which means with the valuations at the trough for IT and the second half of the year in the US looking strong, I think there is a scope for earnings revision upward towards the end of this year for IT companies. Therefore, I think one should start buying now.
All right, maybe it's time to buy into IT stocks. I also want to get in your thoughts on this on online gaming stocks like Nazara as well as Delta. Of course, after the 28% GST being announced by the government, there's a lot being spoken about. How these companies are at it actually poses a threat to the existence of these companies, and we've seen share prices of Delta, of course, take a beating. A lot of big ticket investors have exposure to these stocks. So how should one approach them now after this whole setback of 28% GST?
These companies are basically can operate only in select areas, select geographies. They cannot operate in all states. They have their revenue stream is therefore restricted. And also some amount of online gaming will help them. But with the new tax rate, therefore, what happens is the profitability of that revenue stream has gone down quite a lot. And so until they're able to replace, which means they have to wait for volume growth, which means you're pulling in future growth far more, and it has to grow far faster than previous expectation, which is kind of a tall ask. So therefore, I think they will settle at lower valuations than they were before. So I would continue to stay away from the gaming stocks.
All right. The next stock that I want to talk about is PVR, given the fact that, it has reduced F&B, prices on, snacks and all that. But do you think this will take a bite, in fact, bite into the revenues? How should one play PVR now?
Indeed, because F&B is like a good 30-40% of their revenue stream. And so that takes a hit. Profitability of it is impacted. But the content as it, content is a very cyclical thing. Content is good and bad, and therefore, so from that perspective, still PVR is now clear market leader in the country, and therefore the valuations have corrected quite a lot. It's time to start looking at PVR because as we go into second half of the year with festivals coming, new blockbuster, big budget movies coming up slated for release. I think PVR will look okay at current levels.
All right. Lastly, Chakri, I want to talk to you about banks. Federal Bank reported numbers yesterday. Of course, we've seen margin pressure coming in, even though the management has said that, you can expect a recovery on margins from the second quarter. Do you think margins, would be a setback for some of these banks in this quarter, given the fact that deposits will be repriced? And last quarter, of course, we see banks take the leadership in the earnings. But this quarter, do you expect banks to take a backseat?
If you're going into this quarter, I think the 2-3 trends are quite evident. Where one is loan growth will continue to be fairly strong, but with deposit growth also will kind of pick up. But with deposits repricing coming in, their net interest margins are likely to trend down. In anticipation of that, the bank valuations have actually come off. For instance, Federal Bank now trades at about close to 1 times book value forward multiple. And so, versus its traditional range of about 1.3, 1.4. And so this expectation of lower margins has come down. The bank's provisions are all very strong. NPAs are firmly under control. So I think, after the current round of earnings releases by companies and the new margins, which will be about 40-50 basis points lower, the net interest margins that is, I think it will be time to start buying the NBFCs first and the banks a bit later.
All right, look at NBFCs first and banks later. But Chakri, last question to you: what are the themes that you're liking at this juncture? Would you look at something like consumption, or would you advise investors to look at manufacturing now?
Manufacturing looks very strong with India's government push. In fact, Modi's visit to France is helping a lot of defense and defense-related companies, and the PLI schemes companies like EMS players like Avalon Technologies, companies in that space, they're expanding capacities very fast. Revenues are very strong. Your earnings are going to grow north of 30-40%. I think that space will see continued business momentum, and therefore their stocks also should likewise do that.
All right. With that, Chakri, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us.
Thank you so much.
Right. With that, let's bring on board our technical expert for today. Joining me is Anuj Gupta, who's the Vice President at IIFL Securities. Good morning, Anuj. Good to have you on the show. Well, I want to talk to you about the 19,500 barrier. We've been crossing it, I think, 5 times in a row, but we've not really been able to sustain that level. Would you expect the Nifty to, hit that level and maybe close around that level in today's session, or do you think that will still remain elusive?
Good morning. However, the trend of the Indian equity market is positive. We have seen yesterday also Nifty increased by 0.42% and closed on a positive note. But yes, definitely it's facing some resistance around 19,600 kind of level. But technically, if you see, we saw that 2 weeks back, we saw a good breakout on the charts with the volumes, and market is sustaining on it because the fundamentals of the market is still positive, and the technical side we have seen a huge volume and open interest market in the Nifty and Bank Nifty indexes. So expecting a positive trend. Technically, I am expecting that 19,600 would be a next resistance level. If it's break and close on weekly basis on that level, then we'll see a good run up towards 19,800 to 19,900. But yes, definitely it is facing a resistance on it. So on a downside, 19,300 to 19,200 is a very strong support zone, and we have seen a huge buying interest on that level. So I am expecting that market Nifty will trade between 90,300 to 90,600.
All right, watch out for those levels on the Nifty. Let's talk about the stock of the day, of course, Wipro, given the fact that it has reported a weakish set of numbers, in fact, weaker than what was being expected. EBIT margins on the IT services front down 3% QOQ. In fact, even guidance has disappointed given the fact that it is guided for -2 to +1% guidance for the coming quarter. If you look at the brokerages, they are fairly, cautious on the stock. They've maintained the underperform call. If you look at Jefferies, it believes that second quarter growth guidance is not very comforting, and they've cut the earnings estimates by 2 to 3%. But given the fact that, people were expecting a weakish quarter from some of these IT giants, do you think the weakness is already in the price, and maybe, right now is a good time to look at buying into a Wipro? We have some queries also coming in on our feed, where Alexander wants to know if, it's the right time to buy into Wipro and wait for a recovery going forward.
Exactly. See, as for a concern about the price momentum, I am expecting that it is now bottoming out, and I am looking towards that it will increase from here, because if you see a technical perspective, a few days back it made a low of 352, and right now it is trading around 394. So we have seen getting a momentum this strong, and it increasing from the lower levels. So definitely one who hold a stock on a higher level, so this is a time to accumulate here, or one can average this stock at this point of time. And as we are, if you look after all the IT stock like TCS and Infosys and Wipro, I am expecting that these are stock will become now a bottoming out from here, and one can buy here for as a fresh buying, or as well as for the average purpose. For the Wipro side, I am expecting it will test definitely 420 to 440 levels. Because the trend is positive and now volumes are increasing. So this is a time to accumulate the Wipro stock from here.
All right, time to accumulate Wipro. Hope that answers your query. But we are also getting a few queries on some of the mid-cap IT companies like Persistent, as well as Zensar. Would you say that, one should look at some of these mid-cap stocks ahead of the earnings next week right now, and for a maybe short-term play, for a day trader or something like that?
See, Zensar is a good stock, and it's the beta of the Zensar is equivalent to the Nifty, and we saw that as far as market momentum is stock is momentum, and it's gaining momentum actually. Current is trading around 408 level, and the technical perspective is looking positive. We saw a bottom out kind of level, and also we saw some good breakout, a saucer kind of breakout on the technical chart. So it's looking positive. Volume is there. I am expecting that Zensar technology will increase from here, and I am expecting it may test 440 to 460 level. Still, it is gaining a momentum. It's showing a breakout. Currently, it's trading about 4 weeks high level. So I am expecting it may further move side towards 440 to 460 level. On a downside, 380 would be the strong support. I think one should buy with the stop loss of 380 for the target of 440.
All right, that's the view on Zensar. Hope that answers your query. Let's also talk about Zomato. This stock was up somewhere around 7% or thereabouts yesterday. We have a query coming in from G. Manjunath. wants to know your thoughts. Of course, some of these new age companies have seen a very strong recovery from the lows that we saw last year. Time to nibble into a Zomato now, or wait out for a dip, or how should one approach this entire new age basket now?
See, definitely yesterday we saw a huge breakout in this stock, almost 12% kind of increment in this stock. And interestingly is that it is, 1 year high level. So that is a point where we are seeing a huge breakout in the Zomato stock, and definitely is trading around 82. The breakout with coupled with the volume, so I am expecting this breakout will run up further. And as far as looking on the technical chart, definitely trend is positive, and expecting a 90 to 95 level would be come in the very short term. So this is a counter to buy around 80 levels. If it's come at 2 or 3 rupees down, so one can buy around 80 levels with the stop loss of 74. I'm expecting target would 90 to 95 in a very short term.
All right, that's the view on Zomato. Then let's talk about AngelOne as well. It reported its numbers yesterday. Profits have jumped over 20%, revenue up 18%. And margins, however, have not really been all that good, but it has risen by about 0.5% or thereabouts. Should one look at some of these brokerage stocks now?
Definitely, AngelOne in last week it made a high of 1801, and yesterday also it tested a high of 1804. So, however, prices are taking a resistance, facing a resistance at 1800 kind of level. So the only trend will bullish if stock is able to close above 1800. So I will look at this 1800 level for this stock. If it's break and close above, then we can see momentum towards 1900 to 2000 level. Recently, in last year it made a high of 2022. So that is a important resistance level. So further we'll see a 2000 level. So currently the stock is in on resistance zone. So possibly there should be some supportive news would be there, and also the volume in this counter is little bit as compared to the previous trading session. So I'm expecting a range bound momentum kind of thing in the stock, and definitely looking towards the closing above 1800 kind of level.
All right, look at levels of around 1800 on AngelOne. Let's talk about Lux Industries. We have a query coming in from Arun Srinivas. Wants to know your thoughts, and he wants to hold it for the long term. The stock has been in a downtrend over the last 1 month or so. It has lost somewhere around 4% or thereabouts. Would you advise him to maybe average out at these levels, or continue to hold and book profits once it recovers?
In November 2021, it made a high of 4644, and right now it's trading around 1457. So almost you can say 3000 kind of rupees correction in this stock, and definitely stock is trading at multiple low levels. So I am expecting that price will recover from here. So one should definitely go for the averaging from here, because in recently we saw a recovery in this stock from 1111 to 1457. So recovery is there. So one can buy here with the perspective of the averaging from here, or even one can buy also with the fresh buying in this stock.
All right, that's the view on Lux Industries. Let's talk about some of these oil and gas stocks like ONGC. Given the fact that crude is back in the 3-month highs above $81 now, more leg up for some of these stocks going forward, ONGC and the likes?
Yeah, definitely. Indian Oil Corporation and ONGC are the stocks which gave a very good return in the previous trading sessions. As crude oil is trading around $81 per barrel, and expecting it may test $83 to $85 per barrel. So that will give a support to the oil marketing companies. And as far as concerned about the stock, so ONGC expecting on a positive sign, and I'm expecting it may test 180 to 200 kind of level. So the trend is positive, and that definitely news is very supportive for the ONGC. So one can buy ONGC around 165 kind of level with the stop loss of 150. I'm expecting 190 to 200 kind of level in the mid-term, means 1 to 2 months perspective.
All right, that's the view on the oil and gas space. But let's talk about Patanjali Foods. The OFS has opened, of course, and promoters won't be, in fact, the company will not be exercising the green shoe option for the OFS issue. So the promoters will be selling somewhere around 7% stake in the counter. Yesterday, of course, we saw the stock come under pressure, of course, because the OFS price is at a discount to, was at a discount to Wednesday's close price. But would you advise investors to look at this dip as a buying opportunity, given the fact that the stock has done fairly well over the last 6 odd months?
See, definitely yesterday we saw this momentum due to this OFS offer, and suddenly we saw that this stock corrected by 5%. So definitely this was due to this OFS offer. I'm expecting it may correct further here, at least towards 1080 to 1060. That will be a very strong support. So I'm advising to the clients, please wait for some time. And if it's come around 180 to 160 level, then definitely go for the buy, because the fundamental of the company and the fundamental right of the companies are very positive. So definitely that stock is in trending, volume is there. So buy on dips, and I think would be the prefer for this counter.
All right, buy on dips for Patanjali Foods. That's the strategy one must look at. Let's talk about UPL as well. Karthik has written in and wants to know your thoughts on this stock. This stock, of course, has been hitting fresh 52-week lows, down 6% over the last 5 sessions. A buying opportunity here, or one should completely avoid this one?
I think one should avoid this stock because in last 7 days is continuously on a downtrend, and yesterday is also corrected by 2%. So I'm expecting it may go further because the support was around 670 and it breached the support level and trading below it. So I'm expecting it may test a downside towards 600 to 580 level. So I think one should avoid this stock because stock is in lower top, lower bottom formation. Technical trend is bearish. So I'm not expecting so much appreciation in the stock. So better to wait for some pullback in this stock.
All right, that's the view on UPL then. I think we have time for just about one last query, and I want to take it up on, the defense pack, of course, the likes of Zentech, Masgaon Dog. All these stocks have been high flyers in trade, of course, because of all the defense deals that are being signed with US, now with France. So how if one has investment in these stocks, should one hold on to it, or would you say now is the time to book profits?
I'm very optimistic for the defense sector where BEL, HAL, Dockyard, and Zentech both are, all are very looking positive. But definitely we saw a huge rally in last couple of months. So I will advise to book some partial profit in this stock. But definitely the counter is very positive. So if somebody has a view for next 6 to 8 month kind of months view, so hold this stock for the better return. I am expecting a huge run up in this stock. So if somebody wants to book, then he can book for some partial profit, but writes on profit for next to 5 to 8 months.
All right, this query was from Ron George. Hope that answers your query. With that, we've come to the end of the query segment. But before I let you go, Anuj, leave us with some stock recommendations for our viewers this morning.
Yes, I found 3 stocks, which is one from the IT stock, that is Infi. Infosys buy at the opening price with the stop loss of 1335. Target would be the 1390. Second stock again from the IT stock, that Tech Mahindra, buy at 1150. Buy at market, stop loss 1153. Target would be the 1250. And the last stock is the Hindalco. We saw a huge run up in the base metal counter. And as dollar index is trading below 15 months low level, so that is giving support to the metal. So buy Hindalco with the stop loss of 414. Target would be the 465. So these 3 stocks I am expecting for the today.
All right, 2 stocks from the IT pack, Infosys as well as Tech Mahindra, and Hindalco is the other one stock recommendation coming in from Anuj. With that, Anuj, thanks a lot for taking out time and joining in this morning and of course answering all of your queries as well. With that, we've come to the end of this edition of Morning Trade. So from me and the entire team that put the show together, thanks a lot for watching. Have a great weekend, but don't go anywhere right now because coming up next is Opening Bell. Stay tuned.